Just before Donald Trump and Xi Jinping were set to meet at the APEC summit in Busan, South Korea, gold had already dropped from its October high of about 4,200 per ounce to under 4,000. That drop showed how much this meeting mattered for the balance of money and power. You see, China has been quietly challenging US power, but not with weapons, but with gold. While Washington leans on the dollar, Beijing has been stockpiling gold for almost an entire year, and actually has been offering to host other countries' reserves in Shanghai. This isn't about armies, it's about who controls the world's money. Now, the US dollar still dominates, but China's gold strategy is reshaping the game. Many central banks across the world say they plan to buy more gold, and in 2025, the metal officially overtook the euro by market value as the second largest reserve asset worldwide. The dollar's still number one, but with China leading the charge, question is, for how long? Now, China has been stockpiling gold, taking its official holdings to about 2,300 tons. That's roughly 7.7% of its reserve. But let's be real, world superpowers aren't exactly known for their transparency. That number could be double, who knows. China stepped up its buying after $300 billion of Russia's reserves were frozen back in 2022. Beijing got the message. If your wealth is parked in dollars, someone else holds the keys. Now, the United States still holds the biggest gold stash on Earth, more than 8,000 tons. But the US dollar isn't backed by that gold. Like every currency today, it's fiat money. It only works because people believe in it. And that's the insane part. The entire system runs on faith. Literally faith. In God we trust. Yep, sounds fair. The government prints green paper, tells you it has value, and we all just nod along like good little sheep. A promise from leaders who haven't balanced a budget in decades while piling up 38 trillion in national debt. Listen, the dollar's pretty much monopoly money with better branding. It works because everyone plays along. The system is built on trust, but every gold bar China adds to the stack is one more reason for that trust to crack. And that's where the real tension starts, because this isn't just about gold bars in a vault, it's about power. The US dollar still runs the show, for now, so the dollar still anchors the system. About 57% of global reserves are held in USD, and that's not about to change anytime soon. That dominance gives Washington leverage on global sanctions, financing terms, and even the way global money moves. It's all run through the dollar. Every time a country settles an oil deal, borrows from the IMF, or pays off foreign debt, chances are it was made using USD. But that leverage cuts both ways. When the US froze $300 billion of Russia's reserves and weaponized the dollar, every other major power took note, including China. China's counter was simple. Gold can't be frozen, it can't be sanctioned, censored, or turned off, especially when it's sitting nice and neat in some vault in Shanghai. So while the US wields the dollar, China stacks an asset that sits outside American control. And the thing is, this isn't just theory anymore. You can see the shift happening in real time. Gold recently hit an all-time high of around $4,200 per ounce in October 2025, before easing back to just under $4,000 ahead of the APEC summit in South Korea. Even with that dip, it's still up sharply for the year, roughly 55 to 60% higher. Now, a lot of central banks have been net buyers of gold for 3 years, adding over 1,000 tons annually. That steady accumulation led by China and other world countries pushed gold past the euro as the world's second largest reserve asset by market value, with the US dollar still holding the top spot. If this trend keeps up, the ripple effects are massive. The US borrowing costs rise, sanctions lose power, and America's financial dominance slowly erodes. And eventually, US citizens are going to feel the shift as well, through higher prices, inflation, and job losses, as markets turn chaotic. So if this really is a financial arms race, China's gold versus the American dollar, how do you protect yourself when the rules of money are shifting? When Trump and Xi finally met at the APEC summit in Busan, they stood side by side, talking about resetting relations and restoring stability. But the markets had already spoken. Traders were betting that tensions might cool between the world's two biggest economies, and they weren't wrong. At least for now. The two leaders agreed to a one-year trade truce. Washington would roll back some tariffs, Beijing would delay rare earth export limits, and both sides would buy time. China promised to ramp up US farm imports and crack down on fentanyl precursor chemicals headed to America. In return, the US would pause new tech restrictions, for now. But the real problem's still there. The US chip bans that block China from getting advanced semiconductors for AI and military tech? Still in place. China only delayed its export limits on rare earth metals, basically the building blocks of modern tech and defense systems. Taiwan? What's that? Beijing still flooding global markets with cheap state-backed exports. The fentanyl promise, we'll see how that goes. Probably not well. Oh, and TikTok? Well, they're still dodging the data privacy talk. Other basic things like cybersecurity, IP theft, human rights, all pretty much ignored. Honestly, based on how politics work, this was a textbook summit meeting. We'll never know what really went down behind closed doors, but publicly, this was diplomacy at its finest. It was all smiles and no solutions. Now let's shift our attention from global chess to your wallet. You see, when global superpowers fight over money, regular people pay the price. If China keeps stacking gold and other nations follow, it means fewer dollars being used in global trade. And when demand for the dollar drops, its value weakens. That's higher prices for everything we import. Groceries, gas, tech, all of it. Meanwhile, the government will do what it always does. Print more money to fix it. And every new dollar makes the one in your pocket worth a little less. That is the quiet tax nobody votes for. Inflation. And that's just the start. A weaker dollar means higher interest rates, more expensive debt, and foreign investors slowly walking away. The US would lose some of its economic leverage. Sanctions will hit softer, global deals will get harder, and the debt pile gets even uglier. Oil prices climb, savings shrink, markets shake, and you pay the bill for all of it. Congratulations. Listen, we don't have to be billionaires or central bankers to play defense, but we do need to stop pretending that this system will stay the same forever. The US government runs on debt. The dollar can lose ground. Every major central bank on earth knows it. That's why they're stacking something real, not promises. That's the takeaway here. Own something real. Gold, silver, land, or even a business. Things that don't vanish when currencies wobble. Hold less debt if you can. Build investments that actually work for you and keep your portfolio diverse. Listen, the global economy is way too intertwined for a full divorce. China still needs American consumers and the US still depends on Chinese manufacturing. And honestly, it's in everyone's best interest right now to keep the dollar on top. Because like it or not, America still runs the most powerful economy on the planet, with companies that dominate everything from tech to energy to finance. You've heard the saying, when America sneezes, the world catches a cold. Well, if the dollar collapses, everyone's getting pneumonia. So remember, this isn't just about gold or dollars, it's about trust. The system runs on confidence, not collateral. It keeps spinning because people believe it will. But belief isn't a plan. Every empire that thought its money was untouchable eventually learned what happens when that trust breaks. You see, politicians keep lying, banks keep gambling, and the rest of us just hope our paychecks still buy groceries next month. So yeah, buy your gold, stack your assets, do whatever keeps you sane. Just don't trust that green piece of paper too much. One day it might not be worth what you think it is. Anyway, that's all I gotta say about that. See you in the next one.